Okay, so you're welcome once again to CN Professional Institute. You're still on IFRS 13, fair value measurement. Right, so in the first video, we looked at what fair value is. We looked at market participants and their features and other characteristics. Then we also looked at how to determine the principal market and the most advantageous market, right? And we also looked at the formula for calculating what fair value, which you said is the selling price minus transport cost. In this video or in this session, we are going to solve practical questions. And then when we are done solving the questions, would move on and look at the highest and best use, right? So let's start solving this question. So let's solve more questions so that you get to understand the practical side of what IFRS 13 fair value measurement. Let's start with question 2. Question 2. So question 2 says, CN Limited holds an asset which could be sold in one of two markets. Information about these markets and the cost that will be incurred if sale were to be made is as follows. So we have market X and market Y. We have the selling price, we have the transport cost, and we have the transaction cost. Let's look at the requirement. The first requirement is what fair value would be used to measure the asset if market X were the principal market, and B, what fair value would be used to measure the asset if no principal market could be what identified. So let's start. Let's look at question 2. So question 2A. So question 2A is saying that market X is the principal market. So we said clearly that the standard says we always have to identify the principal market. We have to determine fair value from what? Using the principal market. You have to determine fair value using the principal market. It is when there's no principal market that we use what? The most advantageous market. Right? But this is saying X is the principal market. So what it means is that we have to go to market X and find the fair value using market X. That's all. Okay, so we always use the principal market. And if there's no principal, that's why it's the most advantageous. And this question is saying market X is the principal market. So what it means is just go straight to market X and find the fair value from market X. That's all. We are going to use market X here to determine the fair value. So we are going to use market what? X, right? Because that's the principal market. So we go to market X, pick the selling price. So what's the formula for fair value? We say fair value is equal to selling price minus what? Transport cost. We learned this from the previous video that fair value is equal to a selling price minus your transport cost. So we pick this one here. So what's the fair value from market X? So I told you we are using market what X. So fair value is equal to selling price is what? 650. All right. Then transport cost is what? Transport is 50. So you less and you get what? 600 Ghana cedis. Right. So that's it. So therefore the fair value is 600 Ghana cedis. We are done. That's all. Then we go to B. Now B is saying what fair value will be used if no principal market could be found. And we said if there's no principal market, then we use what? The most advantageous market. The default is principal market. But in the case where there's no principal market, then we use the most advantageous market. And the B is saying if there's no principal market, then what should we do? We use the most advantageous. So we can say if there is no principal market, IFR, IFRS 13. So IFRS 13 says, okay, we should use the most advantageous market. I've made it an abbreviation, I've abbreviated it, okay, mom. So if there's no principal market, then IFRS 13 says we should use what? The most advantageous what? Market. How do we get the most advantageous market? We said the most advantageous market is the market that maximizes the amount that we are going to receive from selling the asset, okay, or that will minimize the amount that we are going to pay to transfer the liability after we have factored in or after we have deducted transport and transaction. So let's pick the markets: market X, market what? Y. Selling price. Here, market X is what? 650. Y is 625. Then transport. Market X is 50. Market Y is also 50. Okay. Then we go to the transaction cost. Market X is 75. Y is what? 25. So we have to less them, right? So after lessing, what do you have here? So the net amount here will be 650 minus 50 minus 75. Here will be 525. And here will be what? 550. All right. So looking at this here, we say therefore market Y is the most advantageous market. Now, why is market Y the most advantageous market? Because it is the market that will maximize the amount they are going to receive to sell the asset. This is an asset. So you see here we are going to receive 550 Ghana cedis. Here we are going to have 525 Ghana cedis. So Y gives us the highest or a higher. Y gives us a higher net amount, and therefore Y becomes the most advantageous market. And therefore we are going to determine the fair value from market what? Y. So for B, we are going to determine what? The most advantageous. We are going to determine the fair value from the most advantageous market, which is market what? Y. So here the most advantageous is market Y. So you go to market Y, therefore you write your fair value is equal to selling price minus our transport cost. So you realize that here for B, fair value will be equal to, so we are determining the fair value from market Y. So selling price is 625. Transport cost is what? 50. All right. So you just deduct, and then the answer you get becomes the fair value. So you see, it's very simple, right? Okay. So I'm getting 575 Ghana cedis. So 625 minus the transport cost, which is what? 50, right? Which is 575 Ghana cedis. So this will be the fair value if there's no principal market. If there's no principal, we use the most advantageous market. Let's go to another question, question 3. So question three says an asset is sold in two different active markets at different prices. An entity enters into transaction in both markets and can assess the price in those markets for the asset at the measurement date as follows. So we have market P and market what? Q. Market P and market what? Q. Then it says we have the price, then we have the transaction cost, we have the transport cost. Then the requirement is what is the fair value of the asset if A, market P is the principal market, and B, no principal market can be determined. So A says if P is the principal market. So if P is the principal market, just go straight and determine the fair value from what? P, right? From market P. So the same formula, fair value is equal to your selling price minus your transport cost, right? So fair value is equal to what the selling price in market P. Selling price is 26. It is. And then your transport here it is 2. And that gives us what? 24 cities, right? So therefore the fair value is 24 cities. Now let's go to B. B says if no principal market can be what determined. And we said that if no principal market can be determined, or if there's no principal market, then we use the most advantageous market. How do we get the most advantageous market? We said the most advantageous market, to get it for assets, we deduct the transport cost and transaction cost from what? The selling price. So we pick the price and then deduct transport and transaction. And then the net amount, we compare the two. The one with the higher or the highest becomes the most advantageous. So what we do is we pick the two. I mean, if you pick selling prices, we have them there. Transport is here, transaction is here. I mean, the other way around, right? Transaction is there, transport is there, and they did the deductions already for us. So market P 26 minus 3 minus 2 we get 21. In the market Q, we have 25 minus 1 minus 2. We have 22. So they have given us the net amount already. So if you compare the two, we see that the higher is what? Market Q. So therefore, market Q is the most advantageous market. And it is that market, it is market Q that we are going to use to determine our what? Our fair value. So we are going to determine fair value from market what? Q, or using market Q, right? Because that's the most advantageous market. All right. So we just go there, the same formula, fair value is equal to your selling price minus your transport cost, right? So just go there, and then what is your fair value there? So we have the selling price in market Q is 25, transport is 2, right? So 25 minus 2, which gives us 23, all right, Ghana cities. So therefore, the fair value is 23 Ghana cities. So can you see how different information can impact what? The fair value computation? Yes, if you compute the fair value from the principal market, you will not get the same answer if you compute the fair value from what? The most advantageous market. All right, so the standard says we should always use the principal. If there's no principal, then we can use the most advantageous market. So that's it with question 3. Let's look at a more complicated question. Now, we have so many questions which we will look at. Let's go and look at question 11. Yes. So let's look at this question. All right. It looks complex, but very simple. Question 11. And I guess I just set this question myself. I just sat down and then I put some figures together to test your understanding on what fair value. I want to find out how you understand the market, the principal market, and then the most advantageous market. Right. So let's get the question. So it says, question 11, the following information relates to quantity and price of a mobile phone sold by NCN Limited and the whole market. All right. Now, one principle that you have to know, maybe I've said it in the previous video, but you've not really grabbed that, you've not really placed it in mind, is that if you are determining the principal market. We said we look at quantities that can be sold on the entire market, quantities that can be absorbed by the market. Now, we don't look at quantities that can be sold by only one company or by one person in that market. We look at the quantity or the quantities that can be sold by the entire market participants. So you don't look at units that one company can sell in that market or units that one entity can sell in that market. We look at quantities that can be sold by the entire what market participants. All right. So that's one principle you have to look at. Now we have the market. We have market A, B, C, D. The unit sold by NCN Limited, who is what one of the market participants. Then we have total sales in the market. Then we have the selling price per unit. You have the transport cost per unit, and then the transaction cost per what per unit. Now the requirement is we should calculate the fair value of the mobile phone. You see, the question didn't tell us anything. The question didn't tell us this is the principal market, this is the most advantageous. It didn't say there's no principal market, so we should use. It didn't say anything. It just presented us with this, and then we are asked to find what the fair value. All right. So as I said, I just said this question to test the understanding. All right. Now, one thing you have to remember is that the standard says we should always use what the principal market. We should determine fair value with reference to what the principal market. It is when there's no principal market that we use the word the most advantageous market. In this question, there's a principal market. What is the principal market? We can get it using the quantities. And I told you to principal market uses what quantities, right? So if you come here, we have units sold by what NCN Limited in the market, and the unit, and then the total sales in the market. Now, if you are determining fair value, we use total sales in the market, total units sold by what all market participants, not units sold by only one what company. I follow. So in this case, this is what we are going to use to determine the principal market. We are going to use the total sales. And as I told you, the selling price, the transport and transaction, we use them to determine the most advantageous market, not the principal. The principal market uses quantities. That's why our focus is on what? Either this or this. Because we are doing or want to determine the principal market. Because that's what the standard says. It says we should always determine fair value using the principal market. It is when there's no principal that we use the most advantageous. All right. And also, if you pick the two, the units sold by NCN Limited and then the total sales in the market, I told you that the standard says we should always use total sales in the market, not units sold by only one individual. So here, we are going to use this one here, the total sales, to determine what? The principal market. So if you look at market A, B, C, and D, in which market can we sell the greater or the greatest quantity? Let me say the greatest quantity or the greatest unit, right? Is it market A? Is it market B, C, or D? Here you realize that it is market what? Just scan through 2 seconds, scan through, you are done scanning through. It is market what? Market D. It is market what? D. Market D. Why market D here? In market D, we have 800,000 what units. So 800,000 units can be sold in market D, and that's the highest. If you compare to this, and this is 800,000. So market D here is the principal market. Why? It is the market in which we can sell the greatest what quantities. And I once again I told you we are not going to use this one because this unit sold by only one entity. We're looking at total sales in the market, right? So you can say using the total sales using the total sales in the market. All right. Market D is the principal market. Or the active market. Yes. Even before this, you have to even state that Okay, so you can add this. You can say IFRS 13 says that, okay, fair value should be determined, okay, using the principal market. Are you following? So you have to state this. Yes, so this is one point or the first point that you can state, and this is the second point that you can state. That IFRS 13 says the fair value should be determined using the principal market. And it is when there's no principal market that is the active, and sorry, it's when there's no principal market that is the most advantageous. And in this question, there is what? A principal market. So market D is a principal market. And therefore we are going to determine the fair value from D. All right. So we are going to determine the fair value using market D. So therefore we use market D to determine the fair value. So let's go to market D. As we know, our formula fair value is equal to selling price minus transport cost. We know this formula already. So we go to market D. What's the fair value in market D? We start with the selling price. So come to market D. What's the selling price in market D? We have it here. So this is the selling price in market what? D. So you bring 10,000 Ghana cedis minus what is the transportation cost in market D? 2,500. So minus 2,500. And then our final answer is 7,500 Ghana cedis. All right. So therefore, the fair value is 7,500 Ghana cedis. So you see, here we didn't touch or we didn't calculate any most advantageous market. We can do it. We just pick the selling price and we less what the transportation cost and transaction. We can do it. But the standard says we should always use the principal market. And principal market uses what? Units sold. Okay, total units sold in the market. And that's what we did. We just went straight and used the unit. So you see, this question blended both the principal market and the most advantageous market. Do you see this analysis of A? Which one is the principal market? Which one is the most advantageous? Which one do I even use? Have in mind, we always use the principal market. And principal market uses what? Quantities. Hope you are getting the concept. We are going to solve another question. So let's go to question 9. Let's go to question what? 9. Now, let's have question 9. That's question 9. It says SPLC is a conglomerate, right, with interest in a whole range of business, including construction services, property management, and farming. XPLC owns a division which sells construction vehicles. At the 3rd December 2026, XPLC holds an inventory of 150 new and identical vehicles. There are 3 markets in which the vehicles can be sold. Information about the sale price and cost in Ghana cedis of selling in each market are as follows. So we have the markets A, B, C. We have the selling price per vehicle in Ghana cedis, transaction cost per vehicle in Ghana cedis, and transport cost to the market per vehicle also in the Ghana cedi. And it says explain and calculate the fair value of the 150 vehicles at 31st December 2026. All right. So let's see. You have the table there. So let's look at the A. It says we should explain and calculate the fair value of the 150 vehicles. And then we have B2 here. So let's look at A first before we go to A and before we go to B. So A is saying we should explain and calculate the fair value. All right. Okay. So this is a table here. Now, you know, the first thing we can say is that fair value is an exit price in the principal market. All right. And we know that we always determine fair value using the principal market. It is when there's no principal market that we go to what? The most advantageous market. What is the principal market? We said the principal market is the market with the greatest level or volume of activity for the asset or the liability. It's the market in which we can sell the greatest quantity. It's the market in which the greatest quantity can be what? Can be sold, right? So if you look at this question, all right, do we have the principal market or not? You see, we don't have the principal market. Why don't we have the principal market? Because we don't have quantities that can be sold in this market. Do we have quantities? No. We have units that can be sold in market A, that can be sold in market B, that can be sold in market C. So there's no principal market in this question. All right. So the standard says, as I said, let's simplify it. We use okay principal market to determine what? The fair value. All right. Why? Because there's a presumption that the principal market is the one, right, in which the entity will normally use, all right, when they are entering into the transaction to sell the asset or transfer the liability, right? So we use the principal market to determine the fair value, and then in the absence of the principal market, in the absence of the principal market, right, we use the most advantageous market. So we use the principal market to determine the fair value, and in the absence of the principal market, we use the most advantageous. So in this question, there is no principal market, and therefore we use what? The most advantageous market, right? And we said the most advantageous market is the market that will maximize the amount that we are going to receive to sell the asset, or minimize the amount that we are going to pay transfer the liability after taking into account, after deducting transport and what? Transaction. So let's work on and see which one is the most advantageous market. So A, B, C. So we bring the price, okay, the selling price. So if you look at the selling price, A is 40,000 Ghana cedis. B is, okay, I'm coming. Let me space this and up so that we can have space to write our stuff. So A, B, and what? C. So B, 39,800. That's what we have here, here, and here. And then C is what? 40,000 Ghana cedis. So these are the selling what? Prices. All right. Then we bring our transport cost or transaction, whichever you want to bring first. So the transaction cost, we have them here. So A is, if you pick the transaction cost, A is, what's the transaction cost for A? We have it here, A is 200. B is 400. Yeah. So B is 400 and C is what? 350. Then that's the transaction cost. Then we go to the transport cost. Transport A is 400. B is 100. And C is what? 350. All right. So we less, and then we get the net amount. So this is not anything difficult. We just pick our selling price, we less our transport, and we less our transaction to determine the most advantageous market, right? Okay. So when you deduct, what do you get? So here you get, let me change my bank color. All right. Okay. So with A, you get 39,400 Ghana cedis. Then with B, you get this minus this minus this. I'm getting 39,300 Ghana cedis. And then here we have 40,000 minus 350 minus 350. I'm getting 39,000, also 300 Ghana cedis. All right. So you realize that to get the most advantageous, you pick the selling price, you less transport, you less transaction cost, right? Okay, so looking at this three, which market is the most advantageous? So therefore, we can say market A is the most advantageous market. Why is market A the most advantageous? Because you know this is 39,400, and then the remaining two are 39,300. So 39,400 is the highest figure, right? And this is in they are all in the Ghana city. Okay, so now we have to determine fair value from market what A, right? So we have to use market A to determine fair value because that is the most advantageous market. So we use market A, yeah, that's what we're going to use. So therefore, as we said, our fair value is equal to selling price minus transport cost. If transport is a feature, so we pick the fair value. What's the selling price here? 40,000 Ghana cedis in market A. Then the transport here is 400 Ghana cedis. So we deduct and we get 39,600 Ghana cedis. So this is the fair value, okay, per vehicle. All right, the question we should calculate the fair value of what the 150 watt vehicle. So therefore, the fair value of the 150 vehicles will be equal to the 39,600 times 150. And I'm getting Ghana cedis 5,940,000, 5,940,000 Ghana. So this is the total fair value. So you see, the question said we should determine the fair value. We thought of the principal market first, but there's no principal market. So we have to go and use the most advantageous. So we have to determine the most advantageous by lessening the transport and transaction from the selling price. And then we got A as the most advantageous market because there was no principal. And therefore we use A to determine the fair value. Let's look at B. B says the following further information concerns XPLC activities, right? In each vehicle market and the size of each market. And then it says explain the impact of this new information on the fair value of the 150 vehicles at 31st December 2026, if any, and recalculate the fair value if needed. So if you look at B, B has now given us what? Units. B has given us what? Sales volume. So you see, B has given us what? Units or sales volume. And immediately you have sales volume or unit, what comes to mind? Principal market. Because principal market uses what? Unit. Right? So looking at the new information here, we are now not going to use the most advantageous again, but we are now going to use the principal market, right? Because we can get the principal market, and B has given us information on how to get the principal market. So now we are going to determine the principal market, right? So now we said the principal market, you know the definition already, and that's what we are going to use, right? So let's determine the principal market. So we have market A, market B, and market C. Even here, let's determine straight from the question. There's no need to write this here. So let's just write B. Yeah. Now A, B, C. Which one is the principal market? And I told you we are not going to use this one because if you are determining fair value, we don't use units sold by one entity. We don't use units sold by one person. We don't use units sold by one company. We use total sales, units sold by all market participants, which is what? This one. So that's what we are going to use. So here, if you check here, 100,000, 600,000, and 90,000. So 100,000, 600,000, and 90,000. So we see that B has the highest unit here. Market B can absorb 600,000 units, which is the highest. Therefore, market B is the what? The principal market. So therefore, we say market B is the principal market. So you have to tell us the reason. Okay, I'm not writing, you write. Why is market B the principal market? Because it is the market that can absorb the highest unit. It is the market in which we can sell the greatest what quantities, right? Which is 600,000. Therefore, we have to determine fair value from what? Market B. So we have to use market B now to determine the fair value. So we are using market B to determine the fair value. So let's go to market B. We have the information up here. Okay. So as we said, fair value is selling price minus what? Transport cost, right? So selling price minus your transport cost. So you come here, fair value, and I said we are determining that using market B because we established the fact that market B is the market B is the principal market. Market B is the principal market. So you have to determine the fair value using market B. So just go there, pick your selling price. What is selling price in market B is here? 39,800. Then minus your transport cost. Our transport cost is 100. And then we deduct and we get 39,700 Ghana cedis. Right, so this is the fair value per vehicle, okay, from market B, which is the principal market. Therefore, fair value of the 150 vehicles will be 39,700 Ghana cedis times the 150 vehicles and multiplying that, and that gives me 5,955,000 Ghana cedis. 5,955,000 Ghana cedis. So you see, this is the answer for B. So can you see how different information affects the fair value, right? So if you determine the fair value from the most advantageous market, it won't be the same as the fair value from the principal market, right? So that is it with this question. So let's end here. This is part 2 of IFRS 13 fair value measurement. So let's end here. We'll continue. We will look at in the subsequent videos or in the next video, we will look at the highest and best use, all right? And then we'll look at the fair value hierarchy, okay? We'll look at level 1 input, level 2, level 3, and then we'll continue solving. There are more questions to solve on the highest and best use. How do you determine fair value of non-financial assets? So that will come up in the next video. So we'll look at that. So thank you once again for watching the video. If you've not subscribed, then please subscribe. You can share the video with your friends so that they also benefit. And then once again, if you want to be a chartered accountant, okay, you want to write your ICG exams, your ACCA, you want to be a chartered tax practitioner, any professional exams you want to write, you can join CN Professional Institutes. We also have scholarship packages available for students. All right, so you can check it out. You can reach out to us, or you can contact us and see if you meet the criteria, you can apply for the scholarship and join us. So for any of your professional qualifications, CN is the best place. So you can just register and join us. See you in the next video. Bye-bye.